Hey everyone, this is Ryan B with Practical Forex Trading. This is your UKOIL Brent Crude analysis for the week of February 16th, 2020. If you want to stay up to date with all of our UKOIL Brent Crude analysis charts, make sure you click that subscribe button in the bottom right hand corner of the screen. Okay, so we're looking at a weekly chart here. As you can see, my sentiment is bearish, but look for a retrace to the $60 region this week. So let's go ahead and take a look. We see here our long multi-year downtrend, right, which price just recently moved away from the last couple of weeks. It had peaked through the $70 area, but couldn't exceed the $70 resistance line. Let's go ahead and map that out. As you can see, that was a pretty historically significant price point. Finally was rejected, moved away all the way below this first support line, right around here. And now we've got a little bit of a retrace coming up. So let's go ahead and look at that. Last week we saw, if we go to the daily, you can see this price action better. There we go. Okay, well, the retracement might actually already be done. To open the market, we might see prices peak up to this a little bit, maybe cross this line. But as my point is, the fast-moving average in the daily is now moving below support. Price is moving below it and has reached back and touched back. So let's look back at other times when price is retraced and touched back on the fast-moving average. We see here at 66, and that made for a nice sell. We see that back here. Price moves off the fast-moving average, and then we see our next sell. Also, that counts the same for buys, right? Price leans back, moves, and then you will every once in a while, using that strategy, get caught in a sideways trap. So when price is moving sideways, range trading kind of makes moving averages not so reliable. But we see that trend we see the price action is broken free of this zone. I don't see any reason why it would retrace any further than $60. It could even fall short of that. So let's go ahead and draw our parallel trend channel for day trading purposes. So there we go. Good chance price won't exceed right here, this 58.65 mark. Definitely still a sell on oil. So let's go ahead, and we do see it price hit some support here, but what I think was going to happen is just going to make a bearish descending triangle. So we can see here at the $53 mark, that's where price paused and did some retrace. Let's go ahead and drag this trend line out. So now, as long as price stays in this triangle, eventually it'll pop out the bottom. So the way these bearish descending triangles work is price remains caught in the pattern, tries to eke out, right? We can see multiple times. And so instead of thinking, oh, price is breaking out this triangle, the trend must be reversing, what you need to think is, if this happens again, price is breaking out of this triangle, it's an even better sell, right? So I'm going to use my triangle tool to better show that. If you think you see a shape, you can use these tools to confirm. Boy, that looks like a price triangle to me. So price is in the bottom now, right? So yeah, be careful here, because even though it's going to hit that fast daily moving average, on the weekly we see it's still got some stuff to prove. So price could just kind of hang out between $53 and $60 a barrel, and then it's still a sell, eventually popping out the bottom. Now, if a big geopolitical event happens, or massive selling on the market, then it could happen, right? Sometimes it has to do with like a data release. You never know what the trigger event is going to be, but that's what needs to happen for the bear trend to resume. Okay, so price will hang out in this price triangle until a trigger event or enough sell orders pile up and price falls out, and then we can see down to previous lows at 28.30 per barrel. So look for sells around $60. You're going to see some retracement. Let's do one more thing. Let's go ahead and look at this at a Fibonacci retracement scenario and see where price is retraced to so far. So Fibonacci tool, for anyone who's not familiar, measures a recent high to a recent low and then tells you the different places where price will retrace according to Fibonacci's golden ratio. Golden ratio. You can find examples of Fibonacci throughout nature, from waves to seashells. So here's what we see, that price has already, the retracement is already done. Last week we hit the Fibo line of 23.6. So, boy, it sure would make a lot of sense if price went up to the $60, the 38.2 mark, and the 382 mark. And then what that would mean was just that price eked above this moving average for a little bit, just like we saw back here, even though it's still in a downtrend. Anyways, the only thing to invalidate, if it were beatable, the only thing that changed my mind, would be if price would close above $70 a barrel. So the downtrend's definitely in play, and it would take that kind of a swing in the market to go bullish. Otherwise, it's a sell. It's a short. All right, have a great week trading, everyone. Good luck to all of you.